All right, so let's get started. Let's jump right into things here. So, once again, thank you so much for taking some time out of your day today to join us here on our presentation. Today, we are jumping into the world of the 203H disaster relief program that is offered by FHA. Now, this program is specifically designed as an option for those borrowers to rebuild their homes and their lives after a major natural disaster. So, eligible borrowers have the ability to use the program to purchase a completely brand new home or rebuild the existing home, um, removing any type of financial barriers, especially after they've lost everything in a major part of their lives. This is what I personally believe one of the most impactful programs that are available out there, especially for those borrowers who are affected by these natural disasters that are continuously happening more and more over the last few years. So, wanted to take some time talk about this program. How it's offered, and kind of the basics of what you need to know about the 203H. As we do with these webinars, if you have any questions as I'm making my way through the presentation, feel free to throw those questions into the chat box. I'll be happy to circle back around to any questions that have come in. And we can also leave a few minutes open at the end of the presentation to open it up if you want to unmute yourself and ask any questions in relation to the topics we discussed in today's presentation. So let's jump right into things and talk about the 203H. So first off, what is the 203H program? So this is a program that is designed specifically for victims that are in a presidentially declared disaster area. So you're going to see that abbreviation a lot through the presentation, that PDMDA. So presidentially declared major disaster area. So that is the main kind of factor that goes into borrower eligibility is the home needs to be located in an area that is declared that way. The goal of the program is to help borrowers reestablish their home ownership, especially after a home has been completely destroyed or at least severely damaged. So, whether the borrower owned or rented the property, they are still eligible for the 203H. So that's a big part about this, is that it's not just for borrowers who own the property, it also is applicable to any borrower that rented a home as well that's in a presidentially declared major disaster area. So, if they rented a home, and their home was completely destroyed by a storm or any other type of natural disaster, and they're eligible to use this, they can use the 23H to get assistance in purchasing a brand new home, whether that be in the same area or somewhere completely different. Now, the type of eligible borrowers here, it is homeowners and renters, as I mentioned. One of the biggest misconceptions about the program is that it's only for homeowners. But as I mentioned a few times already, it is available for renters as well. It's available for your first-time home buyers, and it's also available for anyone who's bought a home multiple times in their lifetime. It applies kind of across the board. Now, when it comes to the type of property that is applicable here, when it comes to the property that's in that declared disaster area, it needs to be either destroyed completely or damaged beyond repair. So borrowers whose residence was completely destroyed or damaged beyond repair, those are the types of borrowers that would be eligible for the 203H. So this allows them to use this program to get back into a type of stable housing situation. From a basic specification standpoint, the 203H allows you to go down to a 580 minimum FICO. You could do a 15 or 30-year fixed on it. You could do a purchase or a rate and term refinance. Now, as I mentioned there, that the homes in this case for this program are either destroyed or completely damaged based on these different storms or major disasters. The main kind of factor, what most people gravitate towards with the 203H, is that the program allows for the borrower to get assistance in purchasing a brand new home. So that's where your purchase comes into place. On a rate and term refinance, 203H can work kind of side by side with, let's say, a renovation transaction. And that would be where refinance would come in place. So if there needs to be significant renovations done to the home to get it back to a livable situation, the home's not completely destroyed, but it's to the point that nobody can live in it. But let's say we finance renovations, that's where that rate and term refinance would come into play. Is if we're doing renovations on the home, they want to keep the home, but they need to do significant renovations to get it up to livable standards. Now, for your LTVs, that's where I was saying why this program is popular for purchase. It goes up to a 100% LTV on the purchase. So if that home is completely destroyed down to the ground, then the 2-3H will allow for the borrower to get 100% LTV on the home that they're now going to be purchasing to replace the home that they lost. If they're doing rate and term, they can go to 97.75%. And if it happens to be a non-arm's length transaction, the max LTV would be capped at 85%. DTI, we would just follow your AUS findings. You can do either an approve eligible or a manual underwrite since this is an FHA loan. It would follow your traditional FHA manual underwriting guidelines. From your property wise, the property that they're purchasing or refinancing needs to be a one unit primary residence. It is available to borrowers that are in HRAP approved condominium projects and in your planned unit development projects as well. So if they are fitting within there, biggest piece here is that 2-3H is capped at one unit on their primary residence. When it comes to qualifying events, the 2-3H applies to a wide range of different type of natural disasters that includes hurricanes, tornadoes, floods, fires, earthquakes, mudslides, and even severe snowstorms, which some parts of the country have experienced within the last month or two. Uh, the key requirement here is that the area must be federally declared as a presidential declared major disaster area. So as long as it's been federally declared as being a disaster area, that is where FEMA will recognize it, and that is where FHA will allow it to be used for a 2 or 3H. FHA will only provide financial support for areas that are federally declared based on these types of major disasters. Now, we've talked about all these things, but kind of to reiterate here why the 2 or 3H matters in today's world. The biggest thing here is that there's little to no down payment, especially if they're doing the purchase option where it gives them 100% LTV. There's no down payment requirement at all in that case. So that's a big win there for especially for those borrowers have lost everything. There are no income limits on there. There's no requirements for them to go through special homebuyer education. And the biggest thing here is the new property they're purchasing does not need to be in the same disaster area. So if they want to stay in the same general area of that state or county or so forth, they are more than welcome to do so. But a borrower could technically move to a different state. They can move completely somewhere far away from the original home, and that's perfectly acceptable as well by using this program, as long as the original home was in that federally declared area. And big thing too here, seller concessions can still go up to 6% following your traditional HUD FHA guidelines. Now, in order for the borrower to provide eligibility to use the program, of course, it needs to be in that federally declared disaster area. But the other items here is that the borrower does need to provide some additional documentation from the HUD standpoint. So biggest thing here is that borrowers must document that their prior residence was located in that declared disaster area and that the damage was severe enough for them to use a 2 or 3H loan. This includes any documentation from FEMA, any type of insurance reports if they're able to get those, or any other types of acceptable evidence. So, for example, in order to prove that the borrower lived in that area, we can use a valid driver's license or voter registration or utility bills with that borrower's name on it to confirm that they lived in the area that was declared as a disaster area. And then from proof of the destruction of the original residence, we can use an insurance report, which sometimes, depending on how severe the damage is in that area, those insurance reports can take a very long time since they're surveying a large area and multiple homes, not just one. If that insurance report takes too long, they can also get a independent fee inspector to go out and do an inspection report on the property. And so that way, that shows exactly full, conclusive photographic evidence showing that the home has been completely destroyed or at least significantly or severely damaged to the point of needing a 2 or 3H loan to step in to help that borrower. So those are different ways to get those documentations to prove and condition for those items that our underwriter is going to put on all your 2 or 3H transactions. And the most important piece I'll leave you with is that the biggest thing here is that that declared disaster area is only good for 1 year. So in order to use the 203H, the FHA case number must be assigned to that borrower within 1 year of the disaster being declared. So for example, if the disaster was declared today on February 5th, 2026, they have until February 5th, 2027 in order to use the 203H. Extensions may apply, but that's on a very specific basis. HUD will announce on their website within their channels if they are providing extensions for certain areas of the country. If, let's say, for example, certain areas of the country are significantly hit more than others based on these different disasters, HUD will announce through their channels if there are any extensions they allow for the 203H that goes past that 1 year limit that is in there. So the biggest part here is just making sure that you fit within there because this is the most common reason why most borrowers miss the eligibility. It's very important to act quickly and make sure that your borrower gets that case number prior to that 1 year mark being cut off in order to make sure they can really use this awesome program that HUD provides for those borrowers that have experienced some significant loss when it comes to these. Now, this program is a very easy, straightforward program. That's why we're already on our final slide of our presentation today. But the biggest thing I want to kind of bring it back around to here is that we want to bring it to the biggest picture because FHA the 23H isn't just another program, it's a lifeline to those families that have experienced some significant loss. Because when somebody's home is destroyed, they're not just looking for a new home or financing in that case, they're looking for a certainty, for stability, for a path forward. And this is where you, as a trusted advisor in your market with your partners, you can step in and make a significant impact to helping the borrowers that are affected by these natural disasters. At the end of the day, here at MLB, our motto is making lives better. And these are one of those programs that is a clear example of how we can go out to the market and do those exact words and help those borrowers and partners that we work with out there. Because at the end of the day, you're not just closing a loan, you're going ahead and helping people rebuild their lives. So that is the 203H. No super quick presentation, really fast and quick information. It's a very simple program, pretty straightforward program, but a really awesome program that HUD offers to those borrowers that have been significantly affected by these disasters. If you have any questions, feel free to throw those into the chat box. Otherwise, you can feel free to unmute yourself and ask questions here. I'll stick around for a few minutes, but I won't take too much time out of your day. But I appreciate you for your partnership and helping us continue that goal of making lives better there for everyone in our partners. Awesome. If there aren't any other questions, like I mentioned, uh, let us know any way that we can assist. Reach out to your assigned account executive for any additional questions you have about this program, all the other programs we offer, and of course, any other assistance you need here with MLB. Thank you again for taking the time out of your day. Have a wonderful rest of your week, and hopefully, I'll talk soon. Thank you so much.